something related to Bitcoin has just been labeled a security by the US SEC. Not a token, not an ETF, not an exchange, but Bitcoin mining. That sentence alone sounds shocking. But before jumping to conclusions, it's important to understand exactly what the SEC is talking about, because this is not about Bitcoin itself. Let's be very clear from the start. The SEC is not suddenly changing its position on Bitcoin. What this lawsuit is actually targeting is a specific business model, third-party or hosted Bitcoin mining services that were sold as passive income investments. These services usually worked like this. A company would tell customers to send money, and in return, the company would buy the mining hardware, install it, power it, maintain it, and run the entire operation. The customer never touched the machines, had no real control over how or when they operated, and simply waited to receive Bitcoin rewards. In practice, the customer wasn't really mining, they were investing in someone else's mining operation. This is where the SEC steps in. Under US law, the SEC uses something called the Howey test to decide what counts as a security. The idea is simple. If people invest money, expect profits, and rely mainly on the efforts of someone else to generate those profits, then the arrangement can legally be considered a security. That's exactly the argument the SEC is making in this case. From the regulator's point of view, these hosted mining deals looked less like people participating in Bitcoin mining and more like investment contracts. Customers were passive, profits depended entirely on the company running the operation, and the marketing often focused on easy or hands-off income. That structure is what triggered the lawsuit. This matters because it draws a very important line. Actively running your own miner, paying for electricity, and taking operational risk is not the same as sending money to a company and expecting returns. The more mining is packaged like a financial product instead of a technical activity, the more likely regulators are to treat it like one. It's also important to say what this does not mean. This does not mean Bitcoin is being reclassified as a security. It does not mean mining is illegal. It does not mean proof of work is under attack. But listen, there is a deeper lesson here. Bitcoin was designed around responsibility, ownership, and direct participation. The more people outsource control in exchange for convenience or promised yield, the more regulation can make an excuse to enter the picture. So the real question is not whether Bitcoin is becoming a security. The real question is how much control you are willing to give up for simplicity and comfort. In Bitcoin, sovereignty and responsibility go together. When one disappears, regulation quickly replaces it. That's it for today. Hit the subscribe button for more informative videos like this one. And as always, stay curious and stay hodling.